please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning. Welcome to Power Breakfast on CNBC TV18, an election central that it is. Last evening we got the exit polls. I'm Mangalam, of course. With me is Anisha. Good morning. Exit polls suggest a clean sweep for BJP. And how are the markets reacting to that? For starters, the SGX Nifty, that one should come up for you. Here you have it, 100-point hat doffing to those exit polls. And remember, this is after a near 110-point recovery in late trade yesterday. So a lot of gumption going in as far as the bulls are concerned this morning.
Well, yes, certainly that had been an overhang for a while, whether the Gujarat elections will sway in which side. But that seems to have been settled, and we'll see the final decision on Monday. Take
a look at the Asian markets. Remember, the Asian markets, every market is trading two individual cues. The first one is the Nikkei. That one is down about 1%, and that's primarily on account of the strength that we're seeing in the yen. So Japanese exporters, the likes of Sony, Toyota, all of them losing in trade. Even the Japanese banks are losing in trade. Remember, we saw some decline in the dollar index yesterday, weighing in and strengthening the dollar yen, and strengthening the yen, that is not good news for Japanese exporters. The Korean markets, remember, yesterday they at one point in time they were up about 1.5%, and then they ended in the red. Now they're seeing some gumption in the morning, gain of 0.5%, led by heavyweights, the likes of Benix as well as Hyundai Motors. But SGX Nifty, as a result of that, Straits and Taiwanese indices, both of them 0.5% in the red. SGX Nifty, that one is trading to its own cues. The Gujarat election, the big trigger out there, indicating a pop of nearly 85 points at the start.
Okay, so a gap-up opening perhaps for the Indian markets, but for the US markets, the Dow ended in the red after reaching an all-time intraday high earlier in the session. The two Republican Party senators raised some concerns about the tax bill. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
U.S. markets closing the day in the red. The Dow slipping 76 points, snapping a 5-day winning streak. The Dow falling by 10 points, the Nasdaq off by 19 points. The Magic Kingdom is expanding its reach. Disney is buying the Fox movie studio and other cable and sports channels from Fox. Disney also announcing that CEO Bob Iger will delay his retirement by 2 years to oversee this mega merger. A big question is, will federal regulators allow the deal to go through? Americans ramped up their spending last month as the holiday season rolls on. November retail sales, excluding automobiles and food items, rose a better than expected 0.8%. That's nearly 6% above the number a year ago, and the best monthly increase since 2004. Another record year for holiday travel. AAA says about 107 million Americans will take to planes, trains, and automobiles between December 23rd and January 1st. Please pack your patience. That's the action from the U.S. markets. Back to you in Mumbai.
All right, that was the U.S. market snapping a 5-day rally, but the Republicans, they're closing in on the final version of the tax bill today before delivering it on President Trump's desk by Christmas. But a potential obstacle seems to be forming overnight as two more Republican senators have insisted on changes, joining the list of lawmakers with uncertain support for the bill. Republican Senator Marco Rubio said he intends to vote against the Republican tax plan unless it includes a larger expansion of child tax credit. Another spokesperson for fellow Republicans, Mike Liu, also said lately that he is undecided.
Okay, let's see how the European markets ended. Well, they ended with deep cuts yesterday after Bank of England and European Central Bank both held fire on changing the interest rate. But remember, the ECB has raised the growth outlook for the region. CNBC's Sri Jekaraju reports on the same.
Let's bring it back to Europe because we are seeing a cyclical upswing over there. That looks as though it's continuing quite nicely. Inflation is higher as well. So that's why the ECB nudged those projections up. But there's no sign at this point that Mario Draghi is looking to accelerate the normalisation process or this move away from stimulative policy. On the contrary, an ample degree of monetary stimulus remains necessary, his words. So the ECB's asset purchase programme will continue at a monthly pace of 30 billion euros. That's intact until the end of September 2018, or possibly could be extended beyond that, depending on what inflation tells us, and that open-ended feature remains unchanged as well. But there are some critics to this policy, including Dutch central banker Klaas Knot, and also policymakers within the ECB, and it all really comes down to how quickly the ECB can manage to converge on the inflation target of 2%. So 1.7% by 2020 is the ECB's projection. So there's some way to go there. In terms of the outlook for the euro, it's below 120, which is a good look for the ECB and a good look for Mario Draghi in terms of export competitiveness. And it looks as though it's going to trade in a tight range. But if the underlying economy within Europe continues to tick along, then the euro could end 2018 at around 125 or even higher.
All right, so the European frontline indices, all of them in the red, but in the peripheral markets, individuals indices moved a lot. If you take a look at the Italian index, that one was down by about 1%. If you look at the Spanish index, that one too was lower in trade. The two indices that really outperformed, the first one was the Greek index. The ATHEX should come up for you, sitting with a gain of about 2.5%, led higher by gains across the banks in Greece. So the Bank of Greece, as well as all the banks, rising anywhere between 6 to 9%. Apart from that, we had the Ukrainian index too, moving higher in the green, outperforming the other peripheral indices. In the emerging market space though, the Russian index gained about 1% in yesterday's trading session. The Brazilian index should come up for you. That one was lower by about 0.2%. So on that note, let's also get in some opinion from Wells Fargo on what they make of the central bank's move and the impacts on the markets, not just in the Eurozone, but across the world.
The European Central Bank does have an economy that's performed slightly better than expected. The inflation numbers are just okay, and I think they will continue on their current path for a sustainable period of time. So for us, the euro will appreciate relative to the dollar. In terms of what we look at in terms of global liquidity, that liquidity actually is still continuing to rise over time. We talk about maybe the Federal Reserve getting a little bit restrictive. We talk about the Bank of Canada raising interest rates, perhaps the Bank of England. But when you look at those balance sheets, they still remain very liquid and provide a lot of support for continued growth going forward.
Okay, let's shift focus to the currency space then. The US dollar gave up intraday gains on doubts about the passage of the tax bill. The dollar index against a basket of 6 major currencies was largely unchanged on the day at 93.58 after earlier rising to 93.75.
In the world of commodities, crude oil prices rise after the International Energy Agency joins the OPEC and the US government in revising up the 2018 output growth from the United States. Brent prices have been rising all this week after the Forties pipeline in the North Sea was shut down due to cracks.
Well, back home on Dalal Street, it was a positive day of trade with both the Nifty and the Sensex ending in the green. In broader markets as well, we saw a bit of rebounds. Bank Nifty surged 167 points, closing above the 25,000 mark. The mid-caps underperformed slightly and ended flat. But to tell us how the cues are stacked up for the day, Nigel joins us now. Nigel, I'm sure the exit polls will be on the top of the mind, right?
Absolutely, Anisha. You know, I joined just yesterday after missing majority of the week, but volatility index tells you that volatility has been very, very high, and we're going into a big event, so that's precisely what's been happening. And this week itself, the India VIX is up close to around 20%. Yesterday, even though the markets ended in the green, yet you saw that in fact the VIX ended in the green, telling you that the IVs on both sides really have moved up. The exit polls, as Anisha said, yes, they're leading towards a BJP victory, and that's something that the bulls will really like. The big question is, after yesterday's big recovery, how much of that is factored in? Remember, yesterday we saw a big recovery of close to around 100 points from the low point of the day. Pull up the SGX Nifty. Mangala was just doing a check on that. That's indicating we're likely to start off in the green. 70 to around 100 points is what it's been indicating. So we're going to be starting off well above that 10,350 odd mark. So just keep that in mind. 10,330, 10,350, that's the level we're likely to open up at. Yesterday though, the bears, they were sensing this. They ran for cover. The Nifty futures open interest was lower. We did see the Bank Nifty open interest as well did come in lower, telling you that some of that short covering did take place in yesterday's trade. And as I said, big recovery from the lows. Nifty 110 points up from the lows. The Nifty Bank close around 300 points from the low point of the day. Well, the mid-cap's relative underperformance is what we saw, because both those two, the mid-cap and the small-cap space, in fact, the small-cap space ended in the red. The breadth of the market as well wasn't good for majority of the trading session. More number of stocks were declining than the number of stocks that were advancing. By the end of the day, we want to know what were the institutions doing. Why did we see such a big recovery? You can attribute it really to short covering, because net-net, the institutions, they didn't do much. The FIs, yes, they bought close to around 230 crores. The DIs, though, they offset all of that. They sold more than 350 crores in trade yesterday. The FIs on the index futures, well, they unwound some part of those long positions. But what I would say is the most positive sign is that, in fact, the FIs, they've been writing puts. In the last couple of trading sessions, the total puts that they've written, that's the put contracts, is more than 25,000 contracts in the last couple of days. And the put writing tells you that the bulls believe they can defend the 10,000 odd mark. Just take a look at that. December 13, December 14, last couple of trading sessions, between them, 25,000 contracts is what they have written. And the 10,000 put, just pull that up. It was the most active yesterday. Now the total open interest is nearly 1 crore shares. I haven't really seen this. The second best would be the 10,500 call. Over there, the open interest is roughly around 70 lakhs. So there's a big difference over there, telling you the bulls believe they can defend the 10,000 odd mark. Remember, the low for this month itself has been around 10,033. So let's see what happens. Going to open up in the green. Let's see whether or not we see a rally from there as well and head towards that 10,500 mark. Or maybe, in fact, a little nervous towards the end of the day. Monday is the big day. Let's see whether or not the bulls can sleep well on the weekend.
All right, whether they can sleep on the weekend or not, we'll watch out for a lot of stocks. Nigel, what about today? Are people, what stocks are going to make people sleep well?
Oh, Manglam, I hope you're going to be sleeping well this weekend. But yeah, let's talk about some stocks then. HDFC, that's the one you're going to be looking at. Well, they're going to be mulling some fundraising, so just keep an eye out on that stock. Abhishek tells us that, in fact, they're looking at a whole host of instruments. So that stock should be on your radar. Union Bank of India, we'll be looking at that stock. Yesterday, in fact, the stock did close at roughly around the 146 rupees. Well, they're raising close to around 2,000 crores via QIP at a price of around 154. So keep that stock on your radar. Gulf Oil Lubricants, well, they've started commercial production at their Chennai plant. So watch out for that stock. And we are almost at the end of Q3, but some companies are reporting the numbers for Q2. Yeah, so anyways, we'll watch out for them. Link Pens, the numbers look quite weak. In fact, the profit number did come in lower by around 61%. Wimplus, no real fireworks. So there we saw the top line growth of close to around 28%, but the profit number came in higher by only around 7%, telling you that operationally there was some margin compression. VIP Clothings, Manglam, you have been tracking this one very, very closely. In fact,
only the stock, not the product.
All right, so VIP Clothing over there, in fact, we did see the margins did jump up. They reported a profit that compared with the loss as well. And Indian Terrain as well, the numbers look quite good. Dornier as well, the numbers look quite good, so expect a positive reaction over there. And finally, we have a listing as well. New kid on the block, shall be limited, should be the one. SGX Nifty is indicating a good start, 70 to around 100 points gap up. Let's see where we go from there. 10,500, that should be the journey we go towards if those exit polls are to be believed. In fact, I think the worst on the street was predicting that the BJP will get 108 to around 110 seats. So that's going in favor of the bulls.
The top of the mind are the Gujarat election exit polls. And if exit polls are anything to go by, the BJP is all set to comfortably retain Gujarat, but there could be a slight dent in their seats tally. Every exit poll has predicted a BJP victory in both Gujarat and Himachal Pradesh. The Congress seem to be gaining in Gujarat, but in Himachal, Rahul Gandhi and Veerbhadra Singh are facing a rout. So let us run you through all the key exit polls for both Gujarat and Himachal.
Okay, let's start with Gujarat first. The Lokniti and CSDS, which was so far pointing to a cliffhanger in the pre-poll surveys, are now predicting a thumping victory for the BJP in the exit poll. They now expect 117 seats for the BJP. This is 2 seats more than what BJP won in 2012.
News 24 and Chanakya exit poll is giving BJP a thumping victory in Gujarat. It expects a 135 seats for the BJP. That's a gain of 20 seats from the last elections. Also, the Congress is losing ground according to this poll. The India Today Axis poll is probably the most conservative. They have a range of 99 to 113 seats for the BJP and 68 to 82 seats to the Congress.
Okay, let's also take a look at what is happening in Himachal Pradesh then. The BJP is set for a big comeback there as well, and the Congress could be staring at a big defeat. BJP could be winning 55 seats according to the News 24 Chanakya poll in the 68-seat assembly, and the Congress is barely making it to double digits. Well, we spoke to a host of political and market players with their view on the exit polls and its impact on politics and the economy.
Our ground reports have been very optimistic. So I think when Mr. Gandhi made that statement yesterday, talking about a very Zabardast landslide victory, I think that was based on the reports that all of us have. Which is frankly a very optimistic take. So we shall reserve our judgment till the 18th. I respect the opinion polls. I'm not going to try and trash the exit polls or anything of the kind. I'm sure they have been done with all the necessary sampling and representative voice given to different sections of society. But we remain pretty convinced that the results on the 18th will be far more positive, if not altogether overwhelming in our favor when the actual verdict comes out.
What's been worrying me about the Rahul and Congress campaign in Gujarat is the economic aspect, because the whole campaign has been directed against corporates, as if there is no corporate India except crony corporates. It looked like Mr. Modi and BJP's campaign was against Pakistan or its collaborators in India or some Muslim leaders or Muslims, whereas Rahul's campaign was fully against corporate India. So it was corporate, it was povertarian, it talked about a lot of freebies. So I would wish, as somebody who believes in liberal economics and liberal society, that Mr. Modi and BJP correct their view on society, on social issues, and Rahul and others correct their view on the economy.